How to draw supply and demand zones part 2. More specifically on uptrending days. And FY, this is exactly what I used to make the $50,000 in one single week, being last week as a whole. So without further ado, first things first, before we get into the how to draw the supply and demand zones, we need to talk about why it's important, how to identify trending up days, and so on and so forth, the more behind the scenes side of things. So the past 15 years annually, this is the chart. Everyone knows it generally just goes up every single year, and there's only been one red year, two, three, four, and this one's so small it almost doesn't even count, to be honest. But four red years out of the past 15. So just from that nature alone, from a trending perspective, you would think that if you buy more calls than puts, option calls being you make money when things go to the upside, option puts being you make money when it goes to the downside. If you do more option calls, you'll make more money or be on a higher percentage chance to make more money. FY. And the only reason why people can't do that conceptually is because the 15-year chart, it looks simple, it makes sense. You buy calls, you make money, right? You hold diamond hands, the whole stupid thing people say. But when you go into the quarterly chart, it looks a little more confusing, right? There's a little more red, it's kind of more scary, but visually it's the same thing. But then you go into the monthly, it's like, oh, there's a bunch more red. I should make money on both sides. I should do this, do that. But it's still the same thing. Weekly starts looking scary. There's more candles. Daily, it definitely looks horrifying. And heck, we even trade on the 5-minute chart, which I'll show you how to draw supply and demand zones on. So it's definitely terrifying. But keep things simple, looking for that current year, or at least the past, its most 52 weeks. And look at this. This is for this year, January to November 2024. This is the weekly chart. This thing specifically has only been going up. If you watch any of my other videos with showing higher highs and higher lows and etc., showing a formal trend, then it goes up. We had a high up here at this specific time, and it came back down over here for a low. So this is a high, and this was a low. Then it went up for a higher high. And you know what it did next after that? It came down for a higher low. So it's following a trend. So then it went up for another higher high because this body over here is higher than this body over here. So a higher high. After that, it came back down for a higher low. So it went from high, low, high, low, high, low. So if we continue the pattern, then it's basically here's a high and it starts coming down for a potential low, and we have to make the assumption, hey, if it continues making this exact same pattern that's extremely visually apparent on the weekly chart, then we should be able to identify this is the trend. It's going on an uptrend. We have to actually draw zones, etc., to better identify that. But just from that simple logic alone, here's in my Charles Schwab account ending in 582 how I made 45,000, well, $44,000 on this specific account. I made the other 6,000 or so on a different account, but you see, I made 45,000, made a loss of a trade at $841, which we'll go into later. But FY, this loss only happened because my stupid self went against the trend for a small trade, and then when I was going for calls, when I was drawing my supply and demand zones, I made the $45,000. So if that's not enough evidence, if you want to make simple trades, follow the trend. If you want to make losing trades, don't follow the trend. All right. So this is what ended up happening the next following week because it did same thing: high, low, high, low, high, low, high, low, boom. And it's gonna either keep going up or maybe it do some kind of pullback and then keep going up, whatever it is. But it's at the moment for this year following this specific trend because annually it goes up nonstop. There are some years where it goes down. Cool, fine. Flip this around. You can make money with puts. I don't care. I just make money with whatever the trend is showing me. So other factors that showed that it was going to go up at this specific point in time specifically were the other two things, which I don't go into what they call fundamental analysis, but here's just two small additional things. At that time, last week, there was a presidential election coming up. Every year, the market goes up on election day. And you may just be thinking, oh, well, you don't know that for sure, et cetera, et cetera. I have a video that came out the week before the election date happened, before I made the $50,000, where I specifically show evidence that this goes up. So I told everyone I was buying calls as a result. And what happened? It went up, and I bought calls as a result. It made $50,000. That was one thing. Second thing, second thing, there was a 99.9% realistically chance that the interest rates were going to go lower due to previous announcements. This longer term causes an uptrend. So this combined with this, combined with an uptrend, means that it more than likely was going to go up from our uptrend perspective. So let's talk about how exactly to get in and draw these supply and demand zones after you've identified simplistic factors like that. So you can be on the right side of things. Because the past 4 days on the 5 minute chart, when we be drawing zones variant in a second, it only went up. So here is SPY, being the S&P 500 on the 5 minute chart. This is how you could have also made $40,000+. So first things first, 1 hour after the market opens over here in Houston, Texas is 9:30 a.m. CST. That's when you specifically come in front of your computer, draw this little line, because that's when you're going to be looking for demand, drawing supply and demand zones specifically. After that, that's when you draw your first demand zone over here at the bottom at this specific spot over here. So you draw it where the low of these candles are, where two candles are agreeing, where this red candle is and this green candle is. So it comes down, does this low piece, and it starts going back upward, as I talked in part one of the other video. Basically, you draw the line and you draw 10 cents on top of it, basically, and then you go ahead and finish that out. After that, you draw a supply zone, being the top piece up here at 588.82. Then you pull this down for 10 cents, draw that rectangle over. And the concept is that, okay, if I know the market's going to be going up into an uptrend, I only want to be taking option calls, being plays that go upward. So you want to be able to make money when it goes and breaks above this zone, comes back for a retest, and then starts going back up, which I'll show you what that looks like. But these zones are basically on the 5 minute chart, and your entries are on the 1 minute chart. So I'm not going to go into a lot of detail, because it's for a different video. But this is that same zone, right? Market came up, it hit this zone. It seemed like it wanted to touch it, fall, touch it, fall, touch it, fall. Didn't really do that. And then it came up, came back to tap it, right in this spot here on the 1 minute chart, and then it went up. And so this is where you could have made an entry for an option call, right? And so drawing the supply and demand zones with the supply zone, this is the one that's going to be moving throughout the day constantly. And that's because it needs to be the highest point of the day for SPY when you're trading. That way you can find the next new high and be able to potentially do a trade. So if this was that high over here at about 9:30 a.m. CST, then if we go over later in the day, after that, right, this was originally the high. Now over here at this point in time, probably about 11:15 a.m. CST, this is the new high at 589.06. So if this is the new high, we have to wait for the same concept to happen. We need to wait for it to come back down, come around, break through, come back down, boom, and then come up to run up. And you may be surprised, but it did it again. If we go to the 1 minute chart, it broke through. This is where the entries would happen, right? It came down, tapped this zone, and it went up. And and if you're familiar with my strategy at all, you may be looking, okay, well, these candles are kind of large, et cetera, et cetera. This reversal candle is large. Again, I don't want to get into price action analysis on the 1 minute chart, but the concept of this is that I don't personally care about the size of the candles or the risk to reward ratio too much when it comes to this, because it's really blown out of proportion. Because yes, if you enter up here, your risk is down here, but we're on an uptrend. So I don't frankly care. I just want to get in the trade. And then that's that. And I can make my money and then call it a day, because it was just going up for just this one day specifically, but really the past 4+ days. But so we so far have had the zone over here at 588.82. We had the zone over here at 589.06. And the zone has to keep moving. That's after the new high and it starts pulling back. You delete the zone. You see this one's not here anymore. Delete the zone. You go ahead and draw the next one. So if we go ahead and go to the next one, there's a new one at 589.37. And you won't believe what the heck happens on the 1 minute chart. It starts here, comes down, breaks above it like it's never done before, came back down to tap it, and then it bounced upward. It does the same thing over and over and over again. The market is screaming at you to just draw the new high, wait for it to break, and then do a retest and then enter it. If there's a retest, you enter it. If there's no retest and it just breaks above it, don't do that. I don't think I have an example. I think I might have an example. Yeah, I have an example here, right? This is the from this specific spot over here, and we draw it over, right? If you don't wait for the retest and you play what's called a breakout because you buy here and then boom, it shoots upward, then this is when it potentially fails. Breakouts that I've studied on SPY specifically have a lower percentage chance likelihood of working. What has a higher percentage chance of likelihood of working are retests, hence why I do the retest, hence why it just works. And I know what you're thinking, it doesn't always work like that, it can't be. Okay, well, here's the proof for one for this day alone, and I'm not even done, by the way, it keeps going, as crazy as that sounds. But two, my old strategy out there, test it yourself. If you make money, congratulations, I told you so. If if you don't make money, congratulations. You saved yourself from actually blowing your account from, doing another trading strategy, quote unquote. But hey, we have 1,005 video testimonials of people that are actually successful because of the strategy. The thing actually works. The real question is, can you make it work for yourself from a patience perspective? Because the hardest thing with the strategy is that, as you see, is you have to wait. Go back to the spot here. You have to wait after you draw this supply zone. This is from 10:40 a.m. to 11:45. There was not a single trade until 11:45-ish a.m. CST. So are you okay with waiting? Because the problem that most people have is that they'll draw this zone, they'll see it fail. Okay, it fell. They'll see it goes up and it failed. Okay, I can't break this supply zone. It went up again. It failed. Okay, I'm missing something. I need to do a put. I need to do a put. I definitely need to do a put. Then they come over here. Then they enter this spot here. Okay, I'm just make some money quickly because I know it's been falling. And then boom, it goes against you and you fail it. And then later on, you see it does this bounce and it goes up and you're like, I should have did option calls. You're the problem if you don't wait for specific trades. This is called high quality trading, which means that there's limited trades for you to do because the strategy has built in fundamentals to say, if this is a high of day, you wait for a retest and you take the trade, and there's a lower number of trades because of it, but they have a higher win ratio. So if we keep going, right, we talked about this one and boom, it bounced very nicely off of this. Then we went over to this guy. Did we talk about this one? Yeah, we did just talk about this one where it bounced off of this one. No little small piece. You might be looking at this. You're like, hey, it's actually not touching it. Again, same concept. I don't frankly give a damn. It's what, maybe a penny, if not, if half a penny is a thing, but it's maybe like a penny away. I want the visual understanding that it's going higher. And if we can kind of go through this, right? If you look at this, for the most part, it's kind of giving the low, right? The high, low. You're not supposed to do this on the 1 minute chart, but high, low, high, low, high, low, high. It's doing the same thing I talked about on the annual chart, even on the 1 minute chart. How do you not actually follow the trend? So we continue. Now you can see where this gets a little dicey, but we'll talk through that in a second. But here's the new high, specifically at this point over here, about 12:15 a.m. CS 12 p.m. CST, excuse me. Then we do the same thing. Here's what it looks like on the 1 minute chart. Because again, we deleted the other ones because this is the new high at this specific point in time. Goes over, breaks above it, comes back down, boom, tap, and it runs up. And you may be thinking, well, based off of how this looks, it looks like it goes sideways. I wouldn't have made a bunch of money. I would have been screwed. The strategy don't work. These zones are stupid. It's a waste of time. FY, two candles for the most part with these average sizes gives you a 10% return. So as an example, just to say, let's just say you entered, I don't know, we'll just call it something random. Let's say you entered here, right? This is a huge candle, but let's just say for simplicity's sake, this candle plus this candle gave you 10% of a trade. If you only did those two candles and you exited and you put in $100, you would have made 10. If you put in $1,000, you would have made 100. If you would have put in $10,000, you would have made 1,000. That's not bad. So it becomes, if you put in $10,000 as the goal long term, in one trade you make $1,000, then conceptually it becomes, can you be right for 2 minutes, what, one time a week for you to make $1,000 a week, which is $4,000 in a single month, which replaces majority of people's base income so that they can quit working for a job, quit working for the man, and actually have some income that they can actually have coming in. And that's off of 2 candles of you being correct. Not 5, not all of these, just 2. So again, it's not that damn complicated. It's the fact of you have to patiently wait for the quality trade to work. You enter based off of this retest and it goes up and nothing else. Not, okay, it broke out, I'm just enter here. Because once you enter here and it pulls back drastically on you, you're going to freak out. Because if it's 10% of a gain to the upside, this is potentially a 5% loss to the downside, almost hitting your stop loss at the bottom here. You would have potentially freaked out. You would have sold it. This is a very, very, very simple strategy, but it's very, very, very simple to mess it up from not having patience. So we have a new piece, 590.66. See, the zones are constantly moving now at this point. Draw the line, draw the rectangle that's 10 cents, wait for it to come back around. You can see it almost like seemed like it was having some difficulties for what? 12 to $1,400, and then it finally broke above. And check this out. So zone over here came above, tried to just break out without a retest, no clear retest, then it fell back down, right? Came back over, then did a little ugly guy, but it was a small retest, but it's a retest. So it went above, broke above, red candle came down, boom, as this red candle here on the 1 minute chart, boom, it shot up. Then you enter somewhere in here, and keep in mind, 2 candles is about 10%. The average size ones anyway. So how much percentage is this for the option contracts that are same day expiration contracts that I teach? This is a lot of money, guys and gals. This is a lot.
If you're looking to become a consistently profitable day trader that makes $10,000 per month, then go ahead and visit mkuniversity.com/info to get started. We provide one-on-one coaching for 2 months, and that way we actually hold your hand and walk you to becoming successful with our specific day trading strategy, which is trading one strategy with one ticker and day trading once per day so you can be successful long term and actually take care of your family. And it doesn't matter where you are, by the way. If you're new to trading or you're an experienced trader already, but you're still just not consistently profitable as a whole, we'll teach you everything from A to Z from the ground up so you can be consistent, so you can be profitable, and more important, you can do the things you want to do, when you want to do them, how you want to do them, and not have to be trading so much. Because the goal when it comes to trading is to get your life back and to get your finances in order so you can do everything you want to do. And by the way, we already have 1,003 video testimonials from people that are already successful using this strategy that you've been learning in this video. So if you want to be the next person, you want to be number 1,004, then go ahead and click the link in the description where it says apply for coaching, and you can go ahead and get started. And now back to the video.
So here's the last one. Throughout the whole day, we've had a couple trades, and you only needed one of them. This is the 591.47. This is the new high, specifically over here at about $1,400, right? None of these trades are relevant anymore. And keep in mind, FY, if you entered any of these trades, you could still be just holding it the entire day. That's well beyond 10%. Might need to add more than 1 0 after that. But hey, you're not going to be mad about making a whole bunch of money, so that's fine. But here's this one. And this is finally the one that does not work because the zone was here, came around, tapped, fell. It's fine. We're not looking for puts. Came around, broke above it as a breakout, came back down, fell below it as just it falling down, and there was no up, down, boom, up to back to a retest in the spot. So there was no trade. So this zone, quote unquote, didn't work. But great. That means that you didn't make a failing trade because there was no retest. That's why breakouts are not the trade for the strategy. You can sometimes force breakouts to work, but it can be too sketchy. Because what if this happens? You buy the breakout and it falls below horribly. You don't want that, right? You want higher quality up, down, boom. And this happened for multiple days as far as clean trades to the upside that we covered in this video specifically here. So if this was just this one day, and the past 4 days have been all up, this was, I believe, this day here, if I remember correctly. Yeah, this was on that day over here. And the next days it went up, and the next day it went up. But as we talked about, if we go all the way back over here, this is the weekly chart. We talked about that the trend is the trend and you should follow the trend because the trend is your friend, then it's not that complicated. Buy calls based off of the trend if it's going up, or buy puts based off the trend if it's going down. But overall, if you learn how to identify the trend on a bigger picture perspective on the weekly chart, and then go down to the 5 minute chart and trade along with that trend and drawing the demand zone at the bottom down here, drawing the supply zone at the top over here, and then letting it do a retest for it to bounce off there. And say you miss it, that's fine. Draw the new supply zone that's moved over at 589.06, and then go to the 1 minute chart and enter that trade and hold that thing, or at least do it for 2 minutes, 5 minutes, 10 minutes, 20 minutes, an hour, whatever it is. You would have made a lot of money. So the money's there for the making. This is overall how to draw supply and demand zones. So you can also make potentially the same amount of money as I did in just a matter of what, 4 days, if not more. And you can have also a nice win loss ratio of 98%. And FYI, this trade here, as I mentioned before, I believe mentioned it before, this was myself being dumb doing an option put. So again, that's me saying the market was going to go down to like a small area. Don't do what I did here to lose $800, even though it's only 800 out of the gain of 45. Just follow the trend, and you can also have a win-loss ratio of 98% and make a bunch of money. And a final thing, you may be thinking, okay, well, if he does all this money here for between the next 4 days, there's no way you can keep that up, et cetera, et cetera. I don't want to keep it up. I made 45,000 in a month. I'm about to send that to myself in a little bit once I get off this piece here. Do you think I'm probably going to be making a trade next week? Maybe, maybe not. Maybe the week after, potentially. How much money am I trying to make? I want, as my strategy relays, the lowest amount of trades possible to so I can maximize my personal life to do things I want to do and pay myself out the money like this. This is more than enough for a month. As a worst case scenario, I don't have to trade the entire rest of the month realistically. I don't care. Well, I mean, put it back on yourself. Let's say in 4 days you made 45,000. Are you really sad that you're not going to next week take another trade? I don't give a damn. The point of trading is to get your life back. The point the point of trading is not to trade nonstop like it's your 9 to 5. I hate working. This is what I like doing, so I can get my life back. So if you want to do the same thing, learn this strategy, get to the point to where you can trade larger contract sizes, and then make the switch of making fewer trades but doing higher quality trades so you can get your life back and make the money that you need to make. And I'd argue a lot of people don't even need to make this. You probably just need to make 4,000, maybe 8,000 at most, and that's fine. I have this, I have a large savings, I'm perfectly fine. I don't have to work another day in my life. I'm just doing this stuff for fun, trying to help some people out. So take the advice if you want to. Don't take it if you don't want to. But if you're trying to make some money, go ahead and give it a shot.